So with a round of applause, let's invite Professor Dean Karlan as he presents.
It's a real pleasure to be here with everybody and a big honor. I always love coming back to Ghana. I don't do it enough, if nothing else, just so I can go to Wooden more. Um, the the strange thing about being a professor, I find, or one of the strange things, is that people often ask me in the context of a keynote, you're expecting me to give you pearls of wisdom here. But the reality is I chose to be a professor because I recognized how little I knew. And I wanted to learn more, not just for the sake of learning, although, yes, I'm a curious person, but because I see that gap as an important path to policy. And in some areas, we know more than others, and we've learned a lot, and some areas are more difficult to learn than others. This is one of those areas. The issues around gender norms and how the intersection between finance and gender is the poster child for it depends. But that doesn't mean we should give up on research and say nothing, what can we really use from what we've learned? If anything, it means we should double down and do more. Okay, so I have two takeaways, both labeled number one in order to signal priority or to be a typo, your choice. One of the one of the lessons that resonated a lot when I was at USAID, and our role at USAID was very, in some sense, similar to this conference. The role that I was playing at USAID was to, first of all, we were like running an entrepreneurial startup within USA. There had never been an office of the chief economist before. So we built it up to 32 people. Now it's down to zero. But our main goal, or one of the main goals, was to help USAID use more evidence of what works and what doesn't around the world in terms of deciding what it should do, how it should do what it does. And one of the first areas that we got involved in was the intersection of gender and agriculture. And as many realize, thank you. There's a large, um, there was a large push for gender-focused programming, but there's often an instinct to just take a program that was going to happen as designed around the other sector, whether it's ag or finance is relevant here, and then just say, no, but now we're reaching women. And one of the consistent lessons that you do see, again, there's always exceptions to everything. The it depends clause you can attach to everything was that if that's all you do is you take a program that was going to just be offering agricultural extension work, for instance, in the farming that we did, and then just reach women, you're not going to achieve the goal of actually helping to promote women's roles while also through the vehicle of agriculture. There had to be some link that actually also shifts the power within the women so that she actually keeps the money from the agricultural income in that example. And so the the basic point is that there's a lot of policies that are targeting women by simply taking whatever was being done in the other sector and saying we're reaching women. And that doesn't usually tend to generate the results one wants. Similarly, intent alone is not enough. That it's really easy to say we aspire for this program to have that effect, we aspire for this program to have this effect, be motivated by good causes, motivated by a strong sense of human rights and intention. And unfortunately, that is not enough. Sometimes that works, sometimes it doesn't. That we need to be willing to take some lumps and learn that things don't always work. And so, the second main takeaway is that the issues that women face, while there are some consistencies around the world, and I'll show you some kind of global statistics, the reality is that the norms that dictate the woman's role and the things that are the constraints that hold back women from seizing the same opportunities that men are able to seize do differ, and the paths to changing them differ around the world. It doesn't mean there aren't going to be some lessons that we can learn from one place to another, but this is going to be much more new. The lessons that we need to learn are going to be inherently much more nuanced than other areas where it's like agricultural extension is also something that's complicated, but in some level less nuanced, I would say. I did it. Okay, so don't click twice. You just have to wait. So a few high level statistics just to share. First of all, um, you know, globally, there's 2.4 billion working age women that lack the same economic rights as men. This is from a World Bank, very large scale study across many, many countries. Um, there's fairly consistent evidence, and obviously this is going to vary depending on the rules and norms in different countries and regulatory policy, but women typically do not have the same access to credit. And that sometimes happens very much so because of laws in the country that actually work against them. Things about inheritance, things about collateral and ownership of property, and things of this nature. And that many of the systems, then even once those are in place, if they do have ownership, they still don't have the same access because of the way banks might be issuing credit underwriting policies. And then the social norms are key pressures that exist that constrain women both in terms of the occupational choice. So there's maybe more likely a mismatch between their skills and what they're able to do, and also just the other demands on them. Childcare is a common example used. Frankly, this is used in the United States just as well as in developing countries. But if you provide business training to a woman or access to capital to a woman, in the case of something we're talking about here, for the purpose of investing in small enterprise, but she also is responsible for taking care of the children, that's obviously a constraint that is going to get in the way of her being able to simply do the best she can earning money with that capital. I did click. Now just waiting. There we go. Okay. Oh, okay. Um, so there's one of the policies that I understand is of high interest in the government in Ghana and many places around the world is to how do we help foster women-led entrepreneurship, specifically through the digital space. Now, what's exciting about the digital space, and I'll get to this more later, is that it lowers the transaction cost. When we think about economics, when we think about market failures and why aren't people able to borrow when if they're good credit risk, why doesn't a bank lend to them? And one of the wedges that is traditionally there is simply transaction costs, that it costs too much money to go to the bank to go to them, or for the bank to monitor and enforce and all of the various things that go in with a loan. Now, a digital wallet doesn't solve all of the problems, but it does radically lower the cost of doing business. And so that's on one hand very exciting. I'll get to an example later that I think of that as also very scary. When you have that quick access to credit, it leads people prone to mistakes. But ultimately, there's a whole series of policies one could take in furthering digital access to women to help start enterprises. And ultimately, the question we need to pose is, what does the evidence say? And what do we need to do to get beyond merely targeting and intent? You could get a little bit confused, right? The person at the top is a perfect example of correlation. They're pushing and the truck's moving, but clearly the person pushing has nothing to do with the truck moving. But if all you did is observe that they're pushing and the truck is moving, you would conclude that, oh, that person's doing a lot. Whereas the person in the back, that's the causal one, right? And the basic point I want to drive home with this is simply that correlation can be very deceiving. In the context of gender, I think one of the most common ones as a policy that we see is financial literacy. Now, we know that financial literacy is correlated with women having more power and with people making better financial decisions. It's almost definitional in a sense. But that doesn't mean that a policy to try to move financial literacy will increase women's power and will lead to better financial decisions. Now, there actually is some positive evidence of financial education, to be clear, but the evidence is much weaker than the rhetoric and the passion behind it. And the third thing that is the unfortunate reality in the case of gender is that there's a lot of times mediating and unwinding effects that take place. Mediating, I think, to Simone Schainer's dissertation, actually, I think it was your dissertation, right? Where there was about providing ATM cards to people where the idea is maybe they could hide some effective money, but it was not effective for women, basically. They weren't able to actually use the card to exert power, and quite the opposite. Those without power were not able to use the card, right? So there can be mediating factors. Tell me if I summarized that right. Sort of. Close enough. There also can be dissipating effects. So in a graduation model, something that we did in collaboration with Brock around the world, where we've tested a very similar model of social protection that provides assets, cash, sometimes in kind, as well as training and access to savings. And we find this nice increase in women's power in 2 years that then dissipates some in 3 years. So what's going on in that dissipation, I don't know. One argument is that it's a clawback problem, that it's really hard to change social norms, and if you change something a little bit for the women that gives them more power, then in the long run the men notice and unwind it, because you haven't changed something at the heart, at the root in society. I don't know if that's right, I want to be clear. Like that's not something that's easy to pin down what was happening, but I can tell you that in the longer run we saw those effects dissipate some versus where they were initially. Okay. So that might make you sound negative. So now I'm going to try to sound a little more positive. Now we have the delay problem, but I think I pushed it and we should be good. Maybe, do you want to just control it directly? Okay, I'll just flag when I want it. So here's a study that integrated mobile money into a lending process by basically making it so that the loan was dispersed via private mobile money. The idea is pretty straightforward. Let the individual have private access to the money. That's almost, in a sense, easier to hide if they want. And what happens? This was done as a randomized control trial in Uganda. This is to get at that correlation causation point. By doing it as a randomized control trial, we can then establish a cleaner case of whether that change causes other changes to happen. So among 3,000 female entrepreneurs, what we see is a 15% increase in business profits, 11% increase in the value of business capital. So that's a pretty important change that does take place. It's and then secondly was tested. Go ahead. Oh, I hit the button. I shouldn't have done that. Sorry. Go to the next slide. Okay. And the secondly was tested encouraging women to make their weekly loan repayments via mobile money instead of via cash. Again, the idea is that maybe this is a way of kind of pulling money out a bit, although it's the repayments. And this was done in Tanzania. And 64% did actually do some of this, so there was adoption of using the money and some demand for it. But it led to only a 7 percentage point increase in women reporting control over their own income. Now, I say only, but I don't know how to scale that, to be fair. I don't know whether to think of that as big or small, but in the grand scheme of things, let's just say it wasn't taking 15% and moving it up to 50%. It was a 7 percentage point change. But this one did not lead to the changes in the business outcomes that were desired and targeted and that were found by changing where the proceeds of the loans go. Go ahead to the next one. And then in Nigeria, there was a test done by testing out digital loans via a smartphone application. Now, we've seen a lot of these types of interventions around the world now, and it's getting to be fairly exciting, I think, but what I'm waiting to see is some kind of aggregation of what we're learning from all of them. Whoops. Okay. So here the test was about an auto-approved process versus a standard approval that where there was a credit score, and if they were just above, they received the loan. If not, they did not. And so in both of these different treatment groups compared to not, we do see this increase in borrowing, but it did not have any effect on women's economic empowerment. And so this is a good example here of something that I would say was just merely targeting women, and it goes to that point that says if that's all you do, it's not to say you will never find the effect that you desire, but this is a good example of a case where it did not lead to the change in female power within the household merely by giving them access to credit or stronger access to credit. Go ahead. So and there's many more. Obviously, this is a short talk and not intended to be a complete synthesis of all of the work in this space. So I picked a few in order to kind of highlight some interesting results that are actually, in some sense, do have some contradiction to them in the sense of that linkage between a strictly finance intervention that is not inherently gendered, and yet looking at what is it do to gender issues. So, sorry. So my takeaway as I started was that we need to understand a lot more better. And that's not just coming from a global understanding, but very much from a collection of local studies. Everything is always ultimately at some level local study, but part of what I mean by this is, we're going to be a little bit less fast to say we learned something that works in Venezuela or Ecuador or Peru, and we're going to move it over to some other part of the world and think that it translates. Even within a country, you're going to find some differences, and we need a better understanding of how to do those diagnostics to understand in order to then set policy. And so social norms are complicated and varied, but yet if we understand something more about what the specific nature is of the constraints, that does lead to some policy. We don't have to be completely bespoke. Every place is new. We can't use any kind of broad lessons. As an example, the occupational choice is an issue which permeates a large part of the world. Now, it might be different in different parts of the world in terms of what it is. Maybe it's what type of crop you can grow. Maybe it's about consumer-facing enterprise versus not. There could be differences along those ways, but the basic principle of occupational choice being a constraint is something that is consistent across. The basic issue of childcare is consistent across. That might vary depending on family structure in different parts of the world, but that's the kind of thing that you can think about up front, look for and identify, and then you can listen to policies in other parts of the world that look into childcare and think about, okay, what did we learn from those policies over there? And that might very well translate here. So while it is complicated, it is true, it is yet vague and not prescriptive, but there are some patterns that do emerge. And this, in my view, makes the returns for evidence that much huger. The two key mistakes that I want to try to avoid here. One goes back to the theme I mentioned earlier, correlation versus causation, and not letting us get too excited by observing correlations. If anything, see them as motivational sometimes and hypothesis forming. But remember that at the end of the day, we need to just put our ideas to the hard test of actually finding out, does this policy work to move the needle in the direction we want for whatever it is we're trying to accomplish? And the second key mistake is assuming that just merely targeting or merely intending to do good, intending to have a change, is not enough. And the answer to both is about finding out, does this policy work in this place or not? Simply put. Go ahead. Can you? Okay. So, to wrap up, digital access is, goes back to economics 101 about lowering the cost of digital access. That's lowering the cost of savings. It's lowering the cost of borrowing. This is exciting, and it leads to huge opportunities. It also does have a unique feature for intra-household and collective issues, which is that it does potentially create some pathways for hiding resources, which can, for obvious reasons, might be something that is that can be used to further the goals of equity. There is an issue, though, about getting kind of 3 clicks to a loan and you get access to credit. That's exciting and scary at the same time. I know I've made tons of financial mistakes by just doing something too fast and then regretting it and realizing that had I just read that better, I would have not done that thing I did, or I would have paid my bill differently or done something, whatever the case is. Right? And so now imagine how easily one could take out a digital loan that has an interest rate that you didn't fully realize, that has a penalty of late payments that you didn't fully appreciate was going to be so high. And that's scary. So this is, for those who are here from the Ministry of Finance, this is a call to action for you to engage in consumer protection. And I don't have a perfect answer for you for how to do that. All I can say is that's something that needs testing. And for women in particular, it might be that much more important because women already start off with less access to credit. And so that initial on-ramp into financial markets might be all the more important in order to establish a good relationship and take out loans that are healthy and appropriate for them. It does remind me, too, of kind of the early days in my career in microcredit, when microcredit was still an open question, or actually, by many of its advocates were sold as like the solution to solving poverty. There's a more modest version of it, which is it expands choice and expands freedom for people, which is basically where the evidence came down, as not a poverty alleviation tool per se, but something kind of somewhere in the middle. But what was striking to me is that throughout it's always had this rhetoric around also empowering women. But yet, if you take out a really high interest rate loan and you're having a hard time repaying it, that doesn't empower you. That disempowers you. You're now subject to those around you to help you repay this loan or suffer the consequences of default. That could lead to some really bad outcomes on a personal level. So it was, for the very reason that places were often targeting women under the premise of higher repayments, higher value of that relationship. They don't have good access to credit, so they are more likely to go through anything they can do to repay that loan. But anything you can do to repay a loan could be very dangerous. And so that always is a bit of a very odd argument in my view that was made 30 years ago, and I still hear today as issue credit, when you really have to ask yourself, okay, what are the terms of this credit? Are they going to understand them? And what is their protection if times are bad, in terms of grievance, in terms of poor actions from lenders to demand repayment, or just overburdening them? Maybe the lender isn't bad per se, but just overburdening them with a debt that they cannot repay, and then they have to turn to the men in their lives and beg them for money. And that obviously has its dangers. Okay, so 3 clicks is exciting and yet scary, but it should be manageable. That's a call to action for Ministry of Finance to think about what those regulations are in order to protect women, or protect anybody, actually. That's true for anybody, but I think because of the vulnerability women face, it's particularly important to make sure that there's process in place for them to make sure they understand the loans, we understand what the costs are, understand what we're getting into, and that there's a pathway to filing complaints and things like this of actors. So the broad lessons I want to leave you with then are threefold. One is correlations can be deceiving. We do need more causal studies, and this is an area that we're going to learn less from we're going to learn less from outside than we do from locally, even more so than some other areas in the world that are not so tied up in social constructs and social norms. The second is that targeting and intent does not typically do enough for what we care about. And the third is we need to be careful about mediating effects. Who is it helping? Is it helping the people? If we're trying to do something to increase power for women, does it actually increase the power for the women that need it the most, or not? And is there a clawback problem? What happens in the long run? Have you really done something to change the underlying fabric of a way a woman is relating to those around her, or is it a temporary change that might risk being clawed back? Next slide. Oh, last slide. Sorry. Okay. Thank you, everybody.